Hi, how are you? European Central Bank's promise of low interest rates no longer convinces investors with inflation advancing. Investors are betting that the global move to withdraw the monetary stimulus supported by the Fed will soon pull the European Central Bank. European Central Bank officials will need to be convincing about a commitment to rock-bottom interest rates, especially as investors grow increasingly skeptical. Financial markets have ignored recent warnings from officials such as the chief economist of the European Central Bank, Philip Lane, about the mistake of investors in anticipating a rise in interest rates at the end of 2022. The task of persuading the market otherwise will fall to the president of institution, Christine Lagarde, when presenting the decision of the European Central Bank Board on Thursday. As inflation advances, driven by supply bottlenecks and rising energy costs, investors are betting that the global move to withdraw Federal Reserve-backed monetary stimulus should soon pull the European Central Bank forward. This idea gained even more prominence in the debate among authorities who are wondering how to make the transition from purchases of emergency bonds, despite the institution's new promise of low interest rates. In September, Lagarde suggested that the financial market's expectation of some tightening in the future was generally well positioned. Since then, amid further signs of inflation, investors have begun to anticipate expectations of higher interest rates and are now projecting that the deposit rate, currently at minus 0.5%, will rise to zero by the end of 2024. The market is well ahead of the likely response from the European Central Bank, said Giles Gale, head of European interest strategy at NatWest Markets. We hope that Lagarde will remind the market that they are serious enough about the future direction that this path represents a highly unlikely high inflation scenario. Guiding investors will be a key challenge for Lagarde, as she will present the outcome of a decision that was only signaled as a springboard to a December showdown between officials that will determine the future of the stimulus. Data to be released on Friday should show consumer prices in the 19 Eurozone countries rising close to 4%, double the European Central Bank's medium-term target. For now, European Central Bank officials have insisted that this advance is largely transitory. Latest forecasts from the European Central Bank show inflation slowing to 1.5% in 2023, not enough to justify higher interest rates based on the institution's updated handbook, according to which projections should show price pressures of 2% for some time before such a measure can be considered. Even if Lagarde and members of the European Central Bank manage to change market sentiment this week, their policy will remain vulnerable to investor concerns driven by rising global prices. Short-term pricing may be corrected a bit lower on Thursday, said Jan van Gerijk, chief strategist at Nordea Bank. But on the broader picture, concerns about global inflation still have room to escalate.